It's great to have you on the program. As I explained, the rand has been very volatile today. We started around 716, 718. We went very close to around 720. We're now sitting again at 716. What exactly is going on? Are we seeing risk aversion because of the Egyptian issues, or are markets just trying to find their feet at this point?
Well, I think you must keep in mind that we've seen a huge move. I mean, Friday afternoon, on the back of what's happening in Egypt, we're now going into the sixth day. There has been a huge rally. The market at the moment, extremely long dollars, looking for some form of pullback. Obviously, sentiment's driving the market right now. We saw a headline out just a couple of moments ago saying that the Suez Canal is open for business, creating a little bit of move back. You saw the rand now trading down at 716 versus the levels that we saw previously this morning, closer up to 719, 718 levels. So there is a lot of negative sentiment around what's happening in the Suez Canal, what's happening around supply issues of oil, the concerns around the contagion that potentially can start to rear its head in the other Middle Eastern states, and that will continue to drive market sentiment for now, certainly in terms of where the risk appetite lies.
So, Bridgid, are you saying that we're going to see a very cautious approach coming to the fore when it comes to the currency market as well? Because the euro is up 0.4% against the greenback, and we saw it pretty much in negative territory earlier in the day, and we saw what happened to the euro on Friday as well, because we saw safe haven buying.
Exactly. Well, that was the whole driver. The driver has been this move around what's, obviously the political tensions, the unease around the market with regards to what that means in terms of the rest of the Middle Eastern the Middle Eastern kind of regions. The big concern is now, is the market overdone? Are we starting to reach technical levels again? Certainly in the rand, that 720 offers a very, very big technical level. We have seen a brief pullback. There are exporters in the market that are keeping it contained up to that 720. Once we break through that, though, it certainly opens up 750 on the top side. But you've seen rallies in the likes of oil, you're seeing it in the gold price as the concerns feed through around the impact of those oil moves, if that will have an inflationary impact, and that's why you're seeing drivers in the commodity prices. We've also seen locally a huge sell-off in our bond market. So these kind of symphony of events certainly hasn't boded well for the rand levels, but we are expecting to see rand trading up to 720s, finding itself in a bit of a pullback before potentially trying a little bit higher.
Well, Bridgid, when can we expect the rand to breach that key 720 level? I mean, we heard from the Reserve Bank last week, and also just from the Finance Minister, Pravin Gordhan, talking about the rand still being overvalued. But that said, we started the year off at around 658, and we're sitting very close to 720 already, and it hasn't even been the end of the month.
Absolutely. I think what you've seen certainly across South African markets is a lot of support of the rand up to around the 7 levels. We've seen importer interest, and then you've seen the exporters coming in at around that 708, 712 level, and keeping the rand within a very narrow range for the last 2 weeks. But now with this move, and specifically this tension that's happening in Egypt, that's driven this risk aversion, which has obviously driven, you're looking at the US Treasuries have galloped, you've seen South African bonds being sold off, and you've seen that across most emerging markets, the currency under pressure. It hasn't managed to break above that 720, which is quite interesting by virtue of the fact that you're finding a good support resistance level where there was a previous good support level. So we're expecting to find it quite difficult to break through, but once we do break through significantly, you can expect to see rand trade a lot higher towards the 750.
There's also been a lot of talk about the Reserve Bank, in fact, accumulating reserves, and some have criticized this move, saying it's costing South Africa a lot of money that could be better spent elsewhere as well. Bridgid, do you think that the Reserve Bank is going to have to be very involved in ensuring that the rand does weaken going further, or do you think that perhaps these outflows that we're seeing from the bond market and also the equity market is going to assist with dampening the strength?
Well, I certainly think it is going to assist for now. I mean, once we saw those relatively strong levels on the rand at the beginning of the year, and as you correctly said, we did see intervention purely to support the rand around that sub-7 level. Now that the rand has got momentum by virtue of the fact that the global markets are going into a risk-averse environment purely driven by what's happening in Egypt, we expect that this continued momentum to be driven purely by the speculators in the market, etc., and the other market forces. I think it's going to be interesting at budget time to look at what the kind of spending is that's going to be involved, certainly how much the government's prepared to throw at the rand as an issue, and also what's been quite interesting is the MPC statement making very clear that the rand will be supported.
Let's touch on South African credit demand. We saw it quickening to 5.58% year on year in December. compared to 4.63% the previous month. Money supply slipping to 6.92% year on year compared with 7.23% in November. Bridgid, I mean, what are you reading into these numbers at this point?
Well, it certainly is showing that people are less pressurised by their debt servicing costs. The interest rate cuts that we've seen have certainly started to benefit, and I think that you're starting to see less stringent measures being imposed by the banks in terms of the credit lending, certainly not to the level of pre-crisis, but you're certainly starting to see more and more momentum bringing up the rear, which is a positive sign for this economy, and I think that it's something that's going to persist for the remainder of 2011.
GDP out of the US fourth quarter growth sitting at 3.2%. I think many were worried when we saw that 0.5% contraction in the UK because of the bad weather in the fourth quarter of last year. Bridgid, overall, your views on the developed market and the growth prospects coming through not only in Europe but also in the US?
I think in the US you're going to see that continued growth. You're going to see, as we see the persistence of QE, the next round of QE feeding into the markets. Obviously, they don't have the austerity packages that you're looking at in the likes of the UK and the Eurozone, which are going to bode negatively in terms of growth outlook this year. That being said, though, if you look at the Eurozone, they're under pressure, but all is not lost. So I think you're seeing in the United States specifically at the moment, you're seeing a boost in their growth scenario. You're going to see housing data out, potentially going to see upside on that as well. So that is, also driving the market around what's happening with this move out of riskier assets. The dollar at the moment has got positive momentum, and that will persist for the next little while. I think slowly as the news around Egypt abates, we'll start to see the market absorbing these numbers, whether or not they are in fact sustainable and what the United States looks like. I think that the developed world this year is going to face extreme headwinds in the form of the austerity packages that have been implied in the likes of the Eurozone and the UK, and that's where we're going to see the pressure come.
Well, I mean, Bridgid, if you had to do the play between the dollar and the euro, and it's something we've debated extensively, it seems that the Eurozone is not, and the peripheral debt issues that have come through are not creating as much anxiety as they were before, and I think many have appreciated the fact that, yes, we might just see restructuring coming through from some of these economies as well. Down the line, are you going to expect perhaps a stronger euro or a stronger dollar when you look at the euro-dollar cross?
Look, I think it's going to be an interesting scenario. I think the first half of this year, obviously this Egyptian scenario certainly wasn't something that we expected. So you're always going to have things that are going to emerge in the market that are going to throw curveballs. But nonetheless, I think as a bigger scheme of things, the European scenario, by virtue of the fact that they have all those peripheral states, certainly poses unbelievable pressure on the likes of the ECB. But they've been very prudent, and they've certainly implied things like their austerity, managing deficits, looking at the long-term sustainability of that economy. Hopefully Germany continues to produce at the rate that it has. Those sort of things should take them out of the woods. That being said, though, the big concern about the United States is, although they're continuing to print cash, they run in an extremely high deficit, and how are they going to combat that? So these are the kind of debates that we're going to have this year. So, I think that in terms of the bigger picture, I still like the Eurozone, I still like the euro itself. I think that we're going to see a lot more support and diversification out of the likes of US Treasuries into more peripheral and European debt. So that will be quite interesting.